Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here with Peter Behncke of Gold Royalty Corporation. Peter, thank you for coming back on the show.
Thanks for having me, Steve.
Yes, and thank you, too, for your efforts on behalf of shareholders such as myself and viewers of the show.
Yeah, I appreciate your continued support.
Yes. Okay, quick overview, market cap, cash, and debt.
So as we sit today, we're just north of a $200 million market cap. Again, shares are traded on the NYSE American. We've got just under $5 million in cash as of our most recent financials, and another $10 million available on our revolving credit facility. Debt right now, we do have $25 million drawn on that revolver and another $40 million in convertible debentures that mature out in 2020 at the end of that year.
Okay, that's what you used to buy Veris.
Correct. Borborema and Veris.
And Veris. Okay. All right, let's do your, tell us about the team that is at Gold Royalty Corporation and how their experience relates to what you guys are doing now.
Yeah, absolutely. So as a reminder, the founders of the company were David Garofalo and Amir Adnani, both bringing multiple decades of senior experience at major operating companies. David was previously CFO at Agnico Eagle, the CEO at Hut Bay, and Gold Corp before joining Gold Royalty in 2020. Beyond him, the likes of Warren Gilman, who runs Queen's Road Capital out of Hong Kong, brings tremendous experience to our board, as well as Alan Hare, also on our board. He'd go on about the board and management team. Main point being with those individuals, they give us a lot of experience and expertise in the space, but importantly, connectivity to anyone in the industry that helps us source opportunities that many of our peers aren't aware of.
Okay, and a lot of experience between all of those guys. Now, as far as ownership, who owns Gold Royalty Company, Corporation, insider ownership, vested partners? What tell us about that breakdown?
So shareholder structure, as mentioned, listed in the U.S. on the NYSE, quite widely held. About 60% of the stock is through retail and free floating, and we do have strong liquidity, trading liquidity as a result. The key chunky shareholders, we have 5% in insider individuals, as well as 12% held by Gold Mining Inc., our former parent company. Our largest, I would call it independent shareholder, is VRIC at 6%, where we acquired some assets from them. And then beyond that, some other institutions ranging between 2 and 4%, Queen's Road Capital, the Taurus Mining Royalty Fund. We're in the VanEck GDXJ, which represents about 5% of our stock. All in all, about 20% institutional, about 20% strategic, and about 60% retail.
60% is available to viewers.
Free float, absolutely.
Okay. How much does David own?
David, I want to say, is close to 1% after our most recent equity offering where he participated. So, okay, but just putting money into that deal as well. Okay. And we've seen management buying through the back half of the year and into the year end. Given the suppressed valuations, I think there's a lot of conviction that we see a lot of upside from where the stock is today.
Okay. All right, let's go over some of the key assets. So you guys have 250-ish royalties, something like that. Maybe that's a little high, maybe 240. You got, let's go through Odyssey. Tell us about Odyssey and the Canadian Malartic.
Yeah, so with those 240 assets, it really is driven by a few chunky assets that drive the majority of the value, the largest of which is our 3% NSR over the Odyssey underground portion of the Canadian Malartic mine. For those that don't know, Canadian Malartic, the second largest gold mine in Canada, going to be the largest underground gold mine once fully transitioned to an underground operation in 2028. Right now, we're in what's called the transition period. They're mining both open pit and underground, and we're getting the majority of our firm revenue from a small portion of the open pit. Where we've seen upside indicated from Agnico Eagle, and this is getting baked into a lot of analyst estimates, is the potential for a second shaft at Odyssey. It's sinking the first shaft right now, and that'll drive close to 500,000 ounces a year of annual underground production. But with the excess mill capacity, only 1/3 of the mill is going to be utilized at the complex. The potential for a second shaft, other regional assets entering production, they could see that annual production get closer to 1 million ounces, which is the upside scenario a lot of the street is looking at. For us, we have a sizable coverage over a lot of the resource there, not just in Odyssey, but at the Midway property to the east. And all of that represents potential mill feed as part of their fill-to-mill property. What is the takeaway? I think while we see our revenue ramp up through 2025 out towards 2028, it's still that 2028 timeline that is the major step change, the real driver of growth for Gold Royalty Canadian market.
Yeah. Okay. All right. So 2028 timetable for the real ramp up for Odyssey. Tell us about Kote.
So Kote, really the most immediate catalyst in our portfolio. This is going to be Canada's third largest gold mine once fully ramped up, close to 500,000 ounces a year of annual production. Our 0.75% NSR royalty covers the southern portion of the pit. The southern portion is the high grade, early portion of the mine life. So we expect to get a quick payback on the production there. They have ramped up to close to 90% of throughput capacity at the end of Q4. So we're looking to see an increase in our Q3 revenue, in our Q4 revenue, which we'll be putting out in March. And in 2025, we'll benefit from a full year of production at Kote.
Okay. All right. That will be exciting. Okay. Last time we talked at the symposium, we were talking about Veris. You guys had just acquired that. And literally, I think it was either 2 or 3 days afterwards, we got the news about the tailings hiccup. Tell us any updates on that.
Yeah, it was definitely a dynamic period after our acquisition. There was the rulings by the local government in Bosnia. There were management changes at Adriatic. All that said, the tailings issue has really not impacted production at all. They have alternate sites across their large property package that are fully permitted now for the tailings to be utilized, but no impact on the mine plan, really.
Okay.
The new CEO of the company brings extensive technical expertise from BHP, and is really helping bring that asset from what was a very entrepreneurial organization, bringing it to development and production, to now being a more mature operating company. We do expect to see initial revenues in our fourth quarter here from Veris, and with a similar timeline to Kote, ramping up through 2025 and a full year of production ahead of us at that asset. And as a reminder, that's 100% copper stream of a polymetallic deposit. So it's predominantly silver and zinc with a smaller portion of copper. That's only 2% of the overall mine revenue. So we're not impacting their overall economics of the project, but they were able to get financing by selling off the copper through a stream.
Yeah. Okay. And that's where you guys came in with the 50 mil?
Like 50 mil, yeah. So we acquired it from Orion, but we acquired that asset for $50 million.
Okay. All right. And what exactly was the issue with the tailings? Basically, the government said that you can't put your tailings where we told you we could. You have to find somewhere else. Or
it was a bit of a bureaucratic exercise where the government was saying that the ministry that had given them permission to clear the forest for that part of the tailings facility didn't actually have the authority to give it. So one government entity talking to another.
Okay.
But ultimately, they had other areas at the site that they could be utilized, and also feel that they can talk to the government and find a way to get that original plan as well as they look to expand and extend that mine life, because only 2/3 of the known resource are currently in the mine plan. So you could see them extending it beyond what's currently stated in the 18-year mine life.
Okay. All right. And Kozamin.
Kozamin is, or what we like to kind of call, an old reliable asset. It's been producing since 2006 with 7 years of mine life ahead of it at that point. Here we are at 2024, 2025, with still 7 years of mine life ahead of it. A high grade, underground, great cash flow for the operating company there. And for us, we had a strong 2024 and would expect something similar. Not significant growth, but not a major pullback. And just a nice $1 million a year in copper revenue for us.
Okay. And do you guys have a silver royalty on that as well, or is it only copper?
So it's an NSR royalty, so it applies to all the metals that are mined. Right now, that's about 80% copper, 20% silver.
Okay.
Kozamin. So we're getting a small amount of silver.
Okay. And how do I pronounce Borborema? Borborema. Tell us about Borborema down in Somers Hill.
Borborema is really the most immediate catalyst in the portfolio, set to enter production here at the end of first quarter by the operator Aura Minerals. And given the structure we have at Aura, we're actually getting pre-production payments up until they achieve technical completion. So we generated close to 1,500 gold equivalent ounces of revenue from Borborema in 2024 before the asset had even entered production. So as we see it enter production, we'll see that ramp up in 2025, and then again benefit from a full year of production from Borborema in 2026.
Okay. How many ounces are they supposed to pull out per year?
It's going to be the first 3 years of the mine life around 80,000 ounces of production. Relatively simple open pit mine plan there, and we have a 2% NSR royalty over Borborema.
Okay, and it's 2% until you reach 750,000, and then or around there, and then after that it goes down to 0.5%.
Correct. So it steps down to 0.5%, but we've created a structured financing package where we also have the option to increase by 0.5% as we convert our loan with Hora Minerals as well. So it's a royalty convertible loan that we provide in them.
Okay, and
Bit of an interesting structure, but provides us immediate income, but we still have that royalty optionality on the structure.
okay, all right. And as far as cash flow, what cash flow does it look like we're going to get from 2024?
So our guidance for the year was 13 to 14 million in revenue against our fixed cost base of around 7 to 8. With the debt we have on the balance sheet, we'll be close to break even on a free cash flow position, covering our interest costs and all of our overheads. But as mentioned, we've got the full year benefit through 2025. So we'll look to start bolstering the balance sheet through next year. I think one of the immediate uses of that capital as we look forward are increasing our financial flexibility with the revolving credit facility, reduce that interest cost, pay down some debt. And with this suppressed multiple, as we continue to bolster the balance sheet and as that financial flexibility, our own currency, our own stock looks increasingly attractive at the suppressed multiple.
Yeah, you guys are like 0.4 to net asset value, something like that.
Yeah,
Right about right.
Yeah.
Okay, all right. And okay, so 2024 looks like it's going to be a break even. Forward projections to 2025. What's it look like?
Well, we haven't come out with our official guidance yet, and we are waiting for a lot of our operating partners themselves to come out. What are they doing with their assets? What is Kote? What is a Canadian Malartic going to look like themselves? But as we come out with that guidance, I think we can be confident that we can see that free cash flow potential, and it will be more definitive as we come out with our Q4 results guidance for the year towards March.
Okay. All right. As far as we got over that, what is the biggest unanswered question of Gold Royalty Corporation today? Biggest question mark.
The question here at VRIC that we're getting is, this is all great. Fundamentals are strong, free cash flow is coming online, high quality portfolio in the Americas. Why is the share price continuing to be suppressed? And as my view, I think something that the market is looking for is, we've promised a lot of this growth. Veris is going to be great, Kote is going to be great, and the operators are delivering, but we need to prove out and show that on our financial statements quarter over quarter before we start to get credit for it. So right now, it really is an emphasis on discipline, delivering on the results. We've built a really good company with really good assets, and ultimately the cash flow needs to come in. And I'm confident that as it does, that'll be the catalyst to re-rate back in line with peers. Because as you noted, we're at 0.4 times net asset value as we sit today. Even if we re-rate back up as line with the other small caps, 0.7, 0.8, that's a significant uplift from where we are today. And I'm optimistic that's closer than far away.
Okay. All right. What could go wrong?
I think from an economic standpoint, a lot of our assets are on existing operations, brownfield assets. The biggest issue or thing that could go wrong is the delay. Something that won't come online as fast as we want. I don't think we have that single asset catastrophe risk that you've seen with some other operators.
Yeah.
And we're in very safe mining jurisdictions with very established operators. While I would like to see the cash flow today, if there are ever a delay of 6-9 months, ultimately that's not deteriorating the economic value of the company. It's not changing our IRR, not changing the NAV, but I would like to see that free cash flow sooner than later, of course, and I'm sure shareholders would as well.
Okay. What else could go wrong?
I mean, where do we start in the mining industry? I mean, we can open up the can of worms in terms of commodity price, what is happening, geopolitical instability, liquidity crisis. I mean, we see valuations across broader equity markets still at baffling levels. And I think in any liquidity crisis, that doesn't just impact those stocks. You see it across commodities and other stocks. Those are things that impact any investment that an investor will look at. But from my perspective, we're really focused on the firm-specific fundamentals at Gold Royalty. And when you look under the hood in our company, we have good assets, we have good cost control, we have growing free cash flows quarter over quarter. And we're focusing on what we can control. And I think if we continue to deliver on those fundamentals, that's where we'll get credit in the medium term.
Okay, awesome. Well, thank you very much, Peter.
Yeah.
I appreciate your candor. And if viewers want to get in touch with you or Gold Royalty Corporation, how can they do so?
Yeah, please reach out. You can find our direct contact line. info@goldroyalty.com is getting in touch with investor relations, and a lot of great information on our website as well, including our asset handbook and corporate presentations. So thank you again, Steve. Really appreciate catching up.
Yes, thank you. And thank you for tuning in. Be sure to support the show and share this with anyone that you think needs to hear it. Probably your buddy who can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.